Hi, welcome to Let's Talk Bonds, the fortnightly podcast from INR Bonds. I'm Arjun Patsati. And the corporate results have been very good with the last and also corroborated by the fact that RBI has given a thumbs up to the economy in its policy review this week. In the June policy review, RBI kept the repo rate stable and did mention that while inflation is still above their rate trajectory of 4%, and they will stay vigilant on inflation and keep policy rates high. But at the same time, they also gave a work going well. The FII flows are portfolio flows are highly positive, and even current account deficit is coming down, and trade deficit largely due to a sharp rise in service exports. So all put together, and also the fourth quarter results, Q4 results of corporates have been very positive, especially for a lot of lenders. Again, if you take CV, commercial vehicle lenders, especially given that the economy is doing much better, a lot more transportation of goods is happening, and that is leading to a lot more traction in CV sales and CV lending. And companies like Cholamandalam Finance, very largely geared towards commercial vehicles, have shown exceptional results. Share prices are at record highs, and so are the many other commercial vehicle lenders. Other lenders, including lenders to MSMEs and SMEs, the biggest lender of all NBFCs, Bajaj Finance, all of them have shown very strong results in the Q4, and guidance also has been extremely positive. We have also seen very strong results coming out from microfinance companies, again showing that a lot of money is flowing into the that sector, and there is a huge amount of offtake. Many of these companies have shown growth, have shown falling NPAs, and also the guidance has been good. And the listed companies like Credit Grameen, the equity prices are also trading at record highs. So clearly, with RBI corroborating and Q4 results, along with equity markets doing well, it does look like a lot of cheer for the for the for the corporates. And when corporates, there is a cheer for corporates, the corporate bonds also cheer. Just before we go into uh, the details of the podcast, if you're a financial advisor, the best place for you is INR Bonds Partner Portal. You can select the best bonds, most information, see all the reports that come out, uh, take cues from all the information that we put out on bonds, and select the best bonds for your clients to invest in the fixed income, for the fixed income investments, and see your fixed income assets grow. So all you need to do is log into INR Bonds Partner Portal and join us as partner to both give your clients the best options in fixed income, as well as to see your fixed income assets grow. And if you're looking for a curated list of bonds, download our app, Quick Invest by INR Bonds, for the best, most for a list of the best curated bonds on offer, with most information, transparency, and prices, and the easiest of in-app investment processes. Download the app now, iOS and Android. Back to the podcast. Corporate bonds um, cheer corporate issuers, cheer strong performance by corporates. And clearly, how do they cheer? Because one is they are able to borrow at lower yields, and those who have issued, the yields have come down. And this is largely because of the fact that when a corporate bond uh, has issued a bond, say, not giving in any names here, but if an issuer has issued a bond at 10%, and the results have been exceptional, and investors are very happy with the results and do not see any issues for the corporate, even though it may be rated lower than AAA, they tend to invest in this because one is the yield is very good, and also the fact that they expect the company's fundamentals to improve and more investors to come in. So typically, the yield that tends to fall from 10% to 9.5% or even 9%. So these are typical corporate markets, investors cheering good corporate results. So, like I was saying, microfinance companies, many of them have seen very strong results. A lot of demand for microfinance bonds in the economy. Commercial lenders, lenders, but most importantly, commercial vehicle lenders. They have seen some very good results, and they are also seeing some good um, movements in their bond deals after their issuances. Maybe there could be a lot of re-rating that could happen. Also, investors could start shifting out of higher rated bonds to bonds that are lower rated bonds, but showing very good traction in the hope that the ratings will improve. Typically, if drawing a parallel to equities, if you take a company that is a stock that is not doing too well, or in a smaller cap or a mid cap, but then suddenly the outlook brightens and a lot of improvements start happening. The fundamentals of the company improves, the equity price rise, and many investors tend to look at such companies for investments. And similarly with corporate bonds, investors do look at such bonds for investments. In India, it's just picking up because retail investors are still getting into the bond market, largely through bond platforms, which are now being regulated by SEBI. And that is giving them a lot of comfort, along with the fact that they are able to get a lot of information and price discovery. Hence, a lot of this kind of investments will start to happen in corporate bonds. And investors can look to their financial advisors to highlight bonds where the yields are good, corporate fundamentals are improving, and they can easily get 3 or 4% over any other investments, including mutual funds or fixed deposits or other fixed income products. Thank you very much for listening in. And do not forget to follow us on all our podcast channels from YouTube to Apple Podcasts to Spotify and Amazon, and Amazon. Thank